Joining us now, Richard Bernstein, advisor, CEO Richard Bernstein. Richard, great to see you. How much of an issue is the 10-year yield being above that level, 4%, and also the climb in the 2-year, which of course makes it more difficult for the parts of the market that bulls have been citing as, it's good news that, for instance, small caps are finally participating, while a higher 2-year yield makes it very difficult for small caps.
Yeah, Melissa, good morning. I think your point and Jeff's point in that previous clip is very important. When you're essentially investing on companies that have very long time horizons, right? Whether we're talking AI or we're talking the metaverse, we're talking cryptocurrencies, anything that has a very long time horizon, upward trending interest rates is not what you want to see, right? We're talking about long duration events far out in the future. You want lower interest rates, not higher interest rates, if that's your investment theme. So Jeff's absolutely right. If long-term interest rates go up here, that's going to be a thorn in the side of the kind of tech cryptocurrency rally.
You've been a critic of that tech, particularly the AI run-up that we've seen, even calling it, I think these are your words, a bubble at this point. Is this what finally breaks that bubble? Is that what finally, breaks, people of the notion that this is a defensive area, that spending in this area will happen no matter what is going on in the economy?
Well, I think, Melissa, first we should rule out that, bubbles pop. It's always very dramatic to say that a bubble is going to end in like a day. It usually takes months, if not quarters, if not years, to dispel the notion that whatever the theme of the bubble was is dead. So I don't think we should think that this is going to happen in a day or a week. But in terms of the other thing I would point out is AI may be, and I would argue will be, a larger part of the economy. That doesn't mean that investing in AI stocks is a good investment. If you go back to the internet bubble in 99 and 2000, certainly the internet became a monstrous part of the economy. But if you bought the internet stocks in December of 99, which was 4 months before the peak of the bubble, it took you 14 years to break even. So I don't think this AI story right now, people are investing in it saying, it's okay, I'll break even in 14 years. No, that's not what people are thinking. But I think we have to separate out the story from the investment opportunity.
That's interesting. I mean, it's a period, Richard, that you know extremely well. Does it mean that you're also against buying at least the picks and shovels of the moment?
So, Carl, I just think that there are better long-term stories in other parts of the economy. Look, if we can all agree that globalization is starting to contract, then I think the story in the United States moves from the themes that I like to call cute wiener dogs in the metaverse to real productive assets. The United States is going to have to become more self-sufficient. We're going to have to rebuild the capital stock in the United States. I personally think that's going to be the story for the next 10 to 15 years, not cute wiener dogs in the metaverse, AI, all these other things.
Right. I noticed, correct me if I'm wrong, lowest U.S. exposure in the history of the firm. What's making up the rest?
So let me step back for a second on that comment, Carl. When we formed RBA in 2009, one of the reasons we actually formed the firm was we thought we were entering one of the biggest bull markets of our careers. And we had so much in equities, in U.S. equities, that people would not invest with us, that they were sure that the United States was such a terrible place to invest. Well, here we are 14 years later. And everybody says the only place to invest in the United States. Meanwhile, fundamentals outside the United States are getting better. Look, if you want earnings momentum, you want estimate revisions, the strongest estimate revisions in the world are in Europe right now. If you want a reflation story that might take shape, jury's still out, it would be Japan. There's lots of different things to think about. There was an article today about Northern Europe and their mineral deposits and things like that. There's lots of different stories going on around the world, but people aren't even looking at what's happening around the world.
How much does the dollar and the strength in the dollar play into this view, Richard?
So Melissa, of course, if the dollar is super strong, that hurts non-U.S. returns, of course. I don't think we should expect the dollar to be super strong here. I think we should expect it to be flat or maybe down. And so in 2 out of the 3 outcomes, probably non-U.S. does reasonably well here. Obviously, if the dollar's weaker, that makes it a better story. But as long as you don't see a screamingly strong dollar, non-U.S., I think, is a viable alternative.
Richard, good to see you. Thank you. Richard Bernstein.
Yeah. Thanks, guys.